Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is February 8th, 2018, and you know what we're going to start with? The charts. Uh, Really, just a very clear, defined downward trading channel, as you can see here. Mortgage-backed securities dipped below $100 and are currently back up to about $100.08 this morning. Support's coming in below us, well, right below us at $100. And then really the next line of support, I think is really right around $99.50, a good 50-cent drop. Um, Resistance is coming in above us at about $101 to $100.50. So up here and more realistically right here. And you can really see that downward trading channel. So unless there's something significant that comes out in our economic reports, I mean, we're just probably going to stay in this for a while, guys. Jobless claims came out today, better than expected. Great for our economy, not so good for bonds. So we are just going to, it's just continuing to see the sell-off. Stocks are down as well, which is kind of interesting. Normally, when stocks sell off, the investors are taking their money, and rather than holding it in cash, because if you hold it in cash, you're technically losing money because of inflation. So normally they take the money from stocks and they go to put it in bonds, and they're making a little bit of money, but you know it's better than losing money from inflation. And we're not seeing that. So investors are taking their money both out of stocks and bonds, as you can see here, and really just pocketing that money and just waiting for everything to turn. I think we will find a floor, guys, but I don't know exactly when that's going to be. So we are going to maintain a locking bias for now. We could see a turnaround with the CPI next week, but if reports continue to come out the way they have, I think the CPI could continue to pressure bonds down. And again, not to beat a dead horse with this, but with quantitative easing, with the U.S. government investing less money back into bonds, that's going to pressure bonds down as well. So even if we have some good reports that are bond friendly, we're still going to see that constant pressure of quantitative easing. So really, again, guys, I think we're just maintaining a locking bias. Now, Freddie didn't release January yet, so I'm still running off of December numbers. But here's where we're at. Freddie said in December, average rate was 3.95 at 0.5. You can source it right down here if you'd like. And if you look back at December, bonds were trading about 102.70. So now they're trading just a little bit over $100. So that's $2.62 difference. And if the average consumer back then was paying half of a point, they're paying over 3 points right now to try to get that same rate. So, and obviously consumers aren't doing that. 3 points when you're doing a $300,000 loan is almost $10,000, $10,000 in fees to get that lower rate. So what are they doing? Most consumers are opting to a higher rate. So that's really what we're seeing. So hopefully Freddie will release out January numbers by the time I do the next report next week, and then it'll be a little bit more realistic because that's just crazy. That's a lot. So let's go over projections. My last projection was a miss. I didn't get aggressive enough on the downward trend, and so I was off by 12 cents. Anyway, sorry about that, guys. But I think the message was delivered. Okay. The three analysts that I follow are all really bearish on not only on short but also on long, so that's very consistent, and you can see that with the clearly defined downward trading channel. So my bond forecast for next week is going to be between $100 and $99.50. That's either going to be 8 cents worse or 68 cents worse. That's my range. So at any rate, I think right now the bias is still toward locking if you have the ability to do so. Otherwise, stay tuned and we'll kind of keep you posted on the market. We will find a floor, guys. We will find a floor. It's just going to just be a matter of time. Anyway, we'd love to hear questions from you. We answer all of our questions, so hit us up. Leave your comments down below. Everything likes to be liked. Like the video if you have a chance. And if it's your first time on the channel, the top guy at the top left, click him. That'll get you subscribed. And if none of this really made sense to you, if you're like, I don't understand these bonds and how that really impacts me as a consumer, why is this important? Super important when you're trying to time, when to lock in your interest rate. Click at the top right, Mortgage Bonds 101. That'll give you the basics you need to know. when trying to lock in at the best time. That's it for this week, guys. We'll see you next week. Have a great weekend. Take care.